How are you all doing today? I'm incredibly happy that you decided to join me. So, welcome to the official first lesson, which will be lesson number one, an introduction class with all of the basic terminologies. So, you're new, okay? You're new to cryptocurrency and you're new to trading in general, and you've got no idea what the heck what means what, right? And that can be very daunting. So, in this particular lesson video of ours, what I intend to do is break down a lot of the common terminologies that you'll hear. So when you're reading technical analysis or when you're going through, say, TA videos or just reading in general or just talking to your friends about it, you'll actually be able to speak the lingo as well. We have to understand that trading is like a different language on its own, right? So when I'm talking to my friends in real life, they're wondering, what the heck am I talking about? To me, because I speak this particular language much more frequently than I actually speak, normal day-to-day English, people are kind of like wondering if I'm weird or something. But once we get absorbed in this type of environment, we tend to get a much better structure of handling the language and understanding what everything means. So if you're new to the market and you're new to cryptocurrency, welcome to cryptocurrency in 2018. You guys are going to have a wonderful chance to be able to catch this amazing 2018 bull run. And I really genuinely hope that after you guys can finish these 17 classes of mine, once you finish these 17 lessons of mine, which would be anywhere between 17 to 25 hours long, you'll have a very firm grasp of not only what the language is and how to speak it, but you'll most likely understand everything that everybody is talking about in every single technical analysis video, which will be very, very awesome. So, what are some of the common terminologies that we should most likely understand? Okay, well, first of all, a lot of people will be talking about this site called TradingView. Let me actually just pull it up here for you guys. So one of the most important things to understand is, what is TradingView? A lot of people will simply just refer to this as the initials T and V, right? It'll just look something like that, just as an example. So a lot of people will just write TV. Check out TV. And what this actually refers to is the website called TradingView. TradingView is a place where you can type in pretty much any single coin, which we're going to get to in a few classes from now, in a few lessons from now. We're going to get to how to actually customize TradingView and how to set it up very well to your particular liking. And I'm going to model it from the perspective of what I personally like, so you guys will have a very good grasp of exactly what you can customize and how you can customize it to as well. So if you actually go to TradingView, right, when you first get here and you log in, create an account here, definitely log in. Um, it's something where if it you don't need to worry too much about security, but you are paying for it, so you definitely want to have some good security on it. But in terms of holding any money on there for crypto, nothing is really going to be significant on there because you're not going to keep any of your holdings on there. But what I would definitely do if you're new to the cryptocurrency space is that make sure you're using a lot of just basically spam accounts, right, for emails. So you want to keep some accounts on there where you don't hold any emails, like maybe where you keep just some very basic things, and don't keep this TradingView account, in your main account, for example, where you would hold like on like Cryptopia or Bitfinex or Binance or anything like that. Make sure that you're always keeping your cryptocurrency emails very private than your social media emails. Okay, so when people refer to an exchange, I'll also show you guys what this refers to. So let's say you go to TradingView first of all. You click on TradingView here, and you go to where it says ticker. If you typed in Bitcoin, right? Think of an exchange as different places where you can actually trade. It's just a place where you end up going to, and different exchanges will hold different coins. So if I typed in Bitcoin here, we see that Bitcoin is tradable on many different exchanges, such as Coinbase, such as Bitfinex, right? Such as, like Bitstamp, for example, Bittrex, Poloniex, Bitflyer, etc. So when you hear people say TV, you're going to see them talk about this particular site right here. That's going to be called trading view, right? Now, the second most important thing that you'll hear people talk about often will basically be CMC, which refers to coin market cap. I personally think that coin market cap is an incredibly invaluable place for you guys to get some information, right? And in this video, we're actually going to go over a lot of the different terminologies that people refer to when they're talking about the price of cryptocurrency. So if you guys go to just coinmarketcap.com here, what you'll see is it'll give you a very good listing of every single cryptocurrency that's listed. So as you guys can see, it goes on and on and on and on, all the way to, how many ever thousands there are, right? There's thousands of cryptocurrencies, guys. So it's actually lagging up my computer just getting there, right? So it goes down and down and down, and there's so many cryptocurrencies. So when we refer to a Bitcoin, right? A Bitcoin is a Bitcoin, just to be very clear. But when we say an altcoin basically refers to every single coin that is not Bitcoin, right? They call it an alternate coin. But nowadays, many coins would be considered a main coin. So for example, Ethereum, sure, you can call it an altcoin still, and Ripple and Bitcoin Cash, etc. But to me, they're more so considered a main coin now. Now, the next thing that we want to focus on is what does the coin market cap refer to, right? The coin market cap right here, where you'll see the market cap with this big number here. This actually ends up referring, I'm just going to go back out of here. It refers to the entire market capitalization of all cryptocurrencies. So it's basically every single coin will have a valuation, right? And the valuation is based on how many coins there are multiplied by the price of each coin, right? So just as an example, if you take the price of Bitcoin right here that it's at, and you multiply it by the circulating supply, this is how you would actually generate this market cap price right here. So if you take the market cap of every single coin, right, every single coin, that is how you would actually generate the market capitalization of all cryptocurrencies. So this site is an incredibly useful site for you guys to use, and I highly recommend that at the beginning of each day when you start to day trade or swing trade, it's going to be a vital part of your success because the market cap will fluctuate up and down always. And we have to understand, guys, that in all markets, okay, don't ever think for a moment that a coin will specifically just go up and it will never come down. We have to understand very firmly that what goes up very high, it will usually come down a very specific amount as well, right? So if something moves up at a very fast speed, well, it needs to take a rest. So think of it as the stock market as something that runs and it needs to take a break, and it's going to run again and it's going to need to take a break and come down. So we have to understand some things such as liquidity, right? And also supply and demand. Liquidity basically refers to how quickly and how liquid, like water, the actual coin can be purchased on the open market, right? So we want to make sure that liquidity is available if you guys are actually investing in a coin. Whenever there's a lot of liquidity, right, it can also reflect how supply and demand is met as well. And just some basic concepts that we need to understand of supply and demand is that, well, let's say the supply of something is very low, but the demand of it is very high. What do you guys think will actually happen there? So let's say that the supply was really low, like say not many people want to sell Bitcoin, but the demand was really high, where a lot of people want to buy Bitcoin. So naturally, because of that imbalance of supply and demand, and more people want to buy, then there's actually the amount of Bitcoins being sold, meaning that it's not as liquid. That will usually mean that the price of Bitcoin will naturally go up as well, right? But let's say it was the other way around where a lot of people were wanting to sell Bitcoin, but not many people were wanting to buy Bitcoin, right? Well, if a lot of people are selling Bitcoin at that specific price and not a lot of people are wanting to buy it, then you can naturally guess as well that the price of Bitcoin will eventually go down to a point until the supply will meet the demand. So another really important column that I always recommend people to take a look at is this one right here. This one right here will be the 24-hour trending volume. So the 24-hour trending volume is incredibly important to make note of. And one of the reasons why I say it's very important is because let's say you were to click right here on the 24-hour volume. And then you go to, so if, by the way, if you click on that right there, and then if you go under markets right here, it'll actually show you all of the different exchanges, which means where these coins are actually being sold, right? It'll show you where all of these exchanges are actually holding Bitcoin as well. And it'll give you a quick breakdown as well of exactly what exchange is selling it at what amount as well. As we can see here, Binance and Bitfinex and OKX are the top three exchanges right now that are actually selling Bitcoin. So these three exchanges alone, they actually account for 10% of the overall 24-hour volume of traded Bitcoin. So what I would recommend to go to after is go to your historical data, okay? If you go to your historical data, this will give you an average of the 24-hour volume that is trending. So just to take a look at it very quickly here, we can see on April the 26th, it did about $8.9 billion. That's a 24-hour volume of traded Bitcoin, of everybody that has been buying and selling Bitcoin. So we see that on April 27th, it's about 7.5 billion, then 7.8 billion, then 8.8 billion. 8.6 billion. And what we see yesterday, right? Take a look at this change right here. We jumped all the way up from 7.5 billion to 10.2 billion dollars, which what does that mean to you guys? Think about it for a minute. So if the volume all of a sudden increased from 7.5 billion to 10.2 billion, what do you guys think that that means? Okay. So take a look at some of these here as well, right? This is where the high is, right? This is where the low is. So the high for May the 2nd, which means the highest point, the highest price that it got to in that specific day, it got to about 9,200 dollars. But if we look at yesterday, it actually got to $9.8 billion, right? So what that actually means is that a lot of people were interested in pumping the price from 9.2 to 9.8 billion dollars. And that's why the 24-hour volume can be very indicative, and it can actually show you how the price and the volume can be reflected and balanced with each other. So if we're seeing a much higher trending 24-hour volume that's been added to the market, we can easily assume as well that, hey, people are generally interested in one way or another at these particular prices. So this is just to give you guys a very quick rundown of how I personally use CoinMarketCap. So let's go over some of these basic and common terminologies that I think are very important to understand. And the ones that we're going to go over is bear market, bull market, day trading, swing trading, exchange, margin, bid, ask, spread, order, rally, volume, volatility, pattern, uptrend, downtrend, consolidation, correction, sideways, sell off, and then we're also going to go over long and short. So these are very common terminologies that you guys will definitely hear of very often, right? So what does a bear market refer to and a bull market especially as well, right? So what we want to be in is we want to be in a bull market, right? So back in ancient history, right, they used to pit bulls and bears against each other. And this is one of the etymologies of how these animals were actually assigned to these particular markets. So if you think of a bear, okay, a bear attacks by, it uses its claws to, go down. I'm doing a pretty bad bear impression, right? But it attacks by, swiping its claws down. But if you think of a bull, right, it's got horns and it swings its way upwards, right? I know, excuse me for embarrassing myself by doing that, but you guys need to understand the very important concept of that. So a bear will actually attack, right, by by swiping its paws and its claws downwards, but a bull attacks by raising its horns and going in an upward motion. So a bear market refers to simply a downtrend. That's where the price action is actually steadily declining. So we're basically going on a downtrend, right? So instead of going up, right, and up and up and up in the price, we're unfortunately going down. So if you guys look with me very closely over here, right? So if you just simply consider a bull market is when the price is steadily going upwards, right? And the price action is going up. And then in a a bear market, that's when the price is simply just going down. If you just think about it from this very basic perspective of how I'm explaining it. If you look at it on the chart, even if you didn't have any idea of how to read this chart, right? So where does it look like it's going up if you look at it? Well, yeah, it looks, if you guys said right around here, right, that's definitely an uptrend, right? I know this might be very basic to a lot of people, but I want to gear it towards people who are much more beginners than other people as well. And trust me, when we get over the very basic terminologies of how everything is done over here, you guys are going to realize that it's gonna pick up very fast. So you got to make sure that you guys understand all of these terminologies, okay? You got to make sure that you're studying. You got to make sure that you're writing these down and you're reviewing them at the end of the class as well. Because if you don't review them, like these to me, guys, right? They're very it's my language that I speak, right? People can speak this language to me all the time, and it just becomes very natural to understand it. So I really hope that you guys are going to understand this as well. So a bear market is basically when we're in a downtrend. So if you guys call this a bull market right here, absolutely, you're right. If you call this a bear market coming downwards, you're actually right as well. But we have to remember that, right? In a bear market, it can refer to many different things. It can refer to the overall trend of everything that is happening, right? Or it can refer to that would be considered a long-term bear trend, right? So let's say we're talking about a long-term bull market, okay? This would be right here. This would be a long-term bull market from the beginning of February the 2017 all the way to about December 2017 there, right? So that is a longer term bull market, bull trend. Now, keep in mind that we're also going to have short term bull markets, right? So, just as an example, right here, this whole structure looks like it's going down and down it did go. So, this would be a long term bear market, but we also see very short term bull markets, right? Very short term. So, yes, we are going to see long term bull markets, right? But we are also going to see perhaps short term or medium term bear markets as well. Remember how I was saying earlier that every time you run up, right, you eventually need to take a rest and you need to take a break and you need to come down. So it runs up, it comes down. It runs up, it comes down. It runs up, it comes down. But when something goes very far up overall for a very long period of time, it unfortunately needs to take a break, a really long break before we can go up. So please don't ever be discouraged and think that we are actually going to always go down. You guys got to remember the history and the future of Bitcoin and how it was created, and a phoenix rose amongst the ashes after the 2008 economic crisis, right? The genius Satoshi Nakamoto decided to invent this new system of currency that no one actually had any control over, right? So it's a decentralized monetary system that's used to exchange currency, where we, the people who own Bitcoin, are actually empowered to control the fate of Bitcoin through a consensus unit that we have stored throughout the blockchain. So remember that this short-term bear market that we might be in right now is not going to stay here forever. I personally believe that there's a lot of leeway and there's going to be tons, guys, there's going to be so much movement for us to go up. Okay, so now that we have a bear market and a bull market understanding out of the way, let's talk about what day trading is. Okay, actually, let's also add in here what swing trading is. Okay, investing. So, what is the difference between the three? Day trading, swing trading, and investing. Okay. So, the traditional definition of a day trader is somebody who specializes in making trades or multiple trades in that specific day only. So, they actually do not hold positions overnight. They will only enter a position for that specific day that they're trading. And by the end of the workday to them, they'll make sure that they close all of their positions and they're not going to hold anything overnight. That's the traditional definition of a day trader, and that's what I do. So a day trader likes to capitalize and on we'll get to the definition of volatility as well, but they like to capitalize on the volatility, which means heavy price swings up and down. Okay, heavy price swings up and down, right, with large percentages. So personally myself as a day trader, I like to specialize in making sure that I take advantage of these major swings throughout the day, and I will play these tiny, 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 tiny little bumps and waves. Keep in mind that for every single big wave, there will be small, tiny little waves up and down in between them as well, right? So we should talk about time frame here as well, which I'm just going to add to here for you guys, okay? So there you go. So now, what is a swing trader? Well, a swing trader has a different mentality and a different style to trade. A swing trader will generally make sure that they will take positions maybe a few times a week at most, okay? And they don't really heavily trade. They will look for opportunities in different ways so that they can hold their position a lot longer than a day trader. So they might hold their position, for example, up to a week. So a swing trader, for example, if you guys are familiar with charts already, which I'm going to assume that you're not, right? So a swing trader will most likely just end up buying right around this bottom over here, right? And they're going to enter a very long swing trade position. And who knows, maybe they wouldn't have even exited their swing trade position. And they'll be looking on a time frame like a daily. But a day trader would be looking on a very slow and small time frame, because when they're looking at a small time frame, right, they can play these little ups and downs throughout these smaller time frames that might be more beneficial and profitable for them as well. So that's what a swing trader does. They will hold for a much longer period than an actual day trader. And that's actually really good for people who are, students who have part-time or full-time jobs. Day traders require that you actually have to sit in front of your computer pretty much at all hours. And that's definitely not fun if you have other obligations. Swing traders actually have a little bit more, they have a lot more freedom, and they might have other things on the go, and they'll make sure that they don't take as many trades as a typical day trader. And also keep in mind that we're actually going to be going over a lot of these definitions, guys. Like, we're going to go over literally every single definition in a lot more detail, because as we talk about it as well, I'll be sure to define them for you guys to make sure that you understand them until they're actually drilled into your head as well, okay? So what is investing compared to day trading and swing trading? Well, investors look for different signals to purchase and to enter the market, okay? So an investor might use a different strategy as well, such as moving average strategies, right? So an investors, they're typically people who will hold for a very longer period of time compared to day or swing trading. So for example, an investor, they don't really care about looking at it on a 5 minute time frame, right? They don't care about the 1 hour or the 2 hour or the 4 hour, right? What they care about is looking at it, for example, on the daily chart, or they care about looking at it from the weekly chart. Because if they look at it on the weekly chart, right, they got a much better gauge of what is happening overall in the very much so bigger picture. Okay. So what does the exchange refer to rather? I think we talked about that already, right? An exchange simply refers to the place that is actually hosting these coins that will allow you to buy or to sell them. So some exchanges will hold some coins that you actually don't have access to on other exchanges. And if you would like to find out, make sure you head to CoinMarketCap there, and they'll give you a very good rundown of what you could actually purchase and on which exchange as well. So time frames, right? Time frames, think of it like this. Time frames allow you to look at it on the big picture and the very small picture as well. So if you're looking at it on a very microscopic kind of scale where you are a day trader, you might be want to look at it. You might be wanting to look at it on a 5 minute chart or a 15 or 30 minute chart, right? So if you're, for example, a swing trader, okay, just as an example, you might not want to be looking at it on those lower time frames, and you might want to look at it, say, on the 3 hour or the 4 hour or the daily. So what they do is it gives you a very small picture of everything that is going on depending on the time frame that we get to, and we're going to get over this in a very high detail, guys, like super high detail, trust me. Okay, and then if we go to it on a very high time frame, so for example on the daily or the actual weekly, that will give you a much bigger picture of everything that is actually going on in the grand scheme of things. So it's very important for us to actually differentiate these time frames. And there's an entire lesson video dedicated specifically for these time frames. And I think that after we go over every single one, you guys are going to get a very good grasp of everything that is going on right now. So then if we take a look at what the margin trading is complicated, okay? Margin trading in a nutshell is basically in a position where you are borrowing money from the exchange. So if you're borrowing money from the actual exchange, it allows you to do something called leveraging. Leveraging means to borrow money from the exchange so that you can play a lot more money than you actually have. So I'm just giving you guys a very basic definition of it. There will be an actual video specifically dedicated to margin trading, and once you get over that, it's going to be a fairly long video. It'll also go over short selling as well. So short selling, that's a definition here. That actually refers to betting against the market, okay? It bets against the market. So you know how usually you want to go long, okay? You want to go long. So if you're in a bull market and you go long, what that basically refers to is it refers to buying at a very cheap price, right? And when you're buying it at a very cheap price, then you're selling it at a high price, right? That's what going long refers to. But what short refers to is you're betting that the market is going down. So if you were to buy one Bitcoin at $10,000, right, and you're shorting the market, and then you actually end up in the market and it goes down to 9,000, right? You buy the Bitcoin back at $9,000 and you keep the literal $1,000 difference, right? It doesn't just mean to sell your position and then buy back cheaper. There's an actual order form specifically for margin trading called shorting, and that's where I make the majority of my money as well. So let's also go over Bitfinex here, since I have got a lot of these definitions up as well. Okay, not just Bitfinex, but I'm going to go over the definition of what an ask is, what a bid is, what a spread is as well. Okay, so every single exchange, it has something called an order book. Okay, has something called an order book. And see these people right here, right? See these people right here, and then these people right here as well. One side is green, one side is red. And then we also have these right here. So what the spread refers to, first of all, is it refers to the difference between this side and this side, which is the difference between the bid and the ask. And every single exchange will actually have this as well. So make sure you guys are familiarizing yourself with this specific order book because it's crucial. So these people here, this is what you call the bids, right? So you want to buy something means you want to bid on a product, right? You want to bid on just like anything in real life. So these are the people that are actually bidding to buy Bitcoin. So you put up an order here on this side, right? And you guys can go over it on your exchange there when you can familiarize yourself with how to use the user interface. I'll teach you guys all the technical analysis, but in terms of how to use the actual interface, that's definitely going to have to be on you guys because I'm only familiarizing myself with Bitfinex, right? And there's a tutorial out for that as well that I'll be releasing to you guys. So this is the bids, right? These guys are the people that are bidding to buy Bitcoin. So for example, here, this guy is trying to buy Bitcoin at $9,656. And then on this side, these are the people that are asking, right? So if you're bidding, right? Or sorry, if you're asking, you would put up a sell order, right? So these people are the ones that are selling right here, and they're putting up an asking price. So if you were to actually buy a Bitcoin, you would be buying it from this specific side right here, which is from the people that are actually bidding, right? Sorry, that you're selling. If you were buying a Bitcoin, you would be buying it from the people from the asking side because they are the people that are wanting to sell. Now, if you were a seller, and you wanted to sell your Bitcoin, you'd be selling it to the people on this side over here. And this side are the people that are asking. So they're asking to buy, they have a bid up. So if you're selling, naturally you'd be selling it to these guys over here, right? And this is your orders, right? What order refers to is your order. So all of these guys are people with orders that are just waiting to get filled right over here. Okay, so I hope that makes a lot of sense right here. So let's get back to some more basic terminology. Alrighty, so now what does a rally refer to? Okay, what does a rally refer to? Just like anything else, think of it like the perspective of if there is an uptrend, a rally is when a group of people end up coming together because they want something to happen, right? Just like in real life, if there's a rally, right? So for example, if Bitcoin is rallying, right? So let's say we're talking about right here when you guys hear the word rally, it refers to a group of people. In this case, it's people in Bitcoin, right? People are Bitcoin. This would be referring to a rally, okay? A rally refers to an uptrend, okay? It refers to an uptrend where a large group of people and they have a consensus where everybody is simply agreeing that they want to rally to form a big uptrend. So just think of it once again as a large group of people who are coming together with one main goal. And that main goal is to create an uptrend. They wanted to go, the price of it to go up. And nothing is more beautiful, guys, than an uptrend, okay? When we have a massive rally. So if you guys ever hear me tweet or see me tweet about something, how there could be a rally, right? Usually, let's say, oh, I should probably add in resistance as well into here, right? That's probably important. If we break a resistance basically refers to a price that has had that's had a lot of trouble breaking before, okay? And we're also going to add support in here as well, just to be clear, okay? So a resistance, just as an example, where would you guys say the high of Bitcoin previously was? Just take a guess. Well, the previous high was where we would see this right here if you said that, okay? So what we see is this resistance was the all-time high resistance, right? But there's also many other small resistances that we can call hurdles as well, right? This is a hurdle. That is a hurdle right around there. And right now we're actually at a hurdle right here as well. So there are many different resistances that we need to break in order to get to different resistances, right? Everything eventually becomes a resistance, right? So if we look at support, what does that refer to? Well, that refers to a particular price where it has a lot of trouble breaking lower, where we're finding that the price action tends to steady out right there, okay? It tends to steady out right there, and the general market doesn't really want the price to get lower than that particular support. So just think of it as where a group of people, or in this particular case, the entire market sentiment decides that, hey, this right here is actually going to be the specific place that I would like to stop it going from lower, right? That's where the market decides, hey, the sentiment here is to buy and we don't want it to get lower, right? So that's important to understand as well. So when we talk about rally, right, everything will end up, let's say we broke right here, okay? This particular place right here. Now, you guys might not even know what this refers to yet, but if we break this particular resistance, it might actually cause a rally to the next one if we think of it like that, right? So every time we break a particular resistance, there's a good chance that we might actually end up all rallying together to get to the next one, the next resistance. So that's important to understand as well. So what does the volume refer to? Well, that refers to simply how much of the asset, or in this case, how much Bitcoin is actually being traded. How interested is the general market, right? Is there a large amount of volume in terms of, is it really liquid right now? Are people buying it? Are a lot of people buying it to support it? And now there's a lot of indicators, such as this one over here, or if you guys take a look at it, right? The volume bar indicates that, hey, there's an actual indicator that will show you how much Bitcoin is actually being traded at a particular at a particular price point, right? Or at a particular point in general. So I personally use volume as a very strong indicator to let me know how interested is the market at these particular price levels. And as we can see right here, right? And also right here, if you guys are a little familiar with charts already, we can see that when it got to $6,000, a lot of people were actually extremely, guys. They were extremely interested in Bitcoin at that particular price range right there. So what does volatility refers to? Volatility refers to how much in 24 hours is the price swinging up and down. So as a day trader myself and as a swing trader, I specifically focus on looking for a coin that has very heavy volatility, because the more volatility it has, the more general percentages that it will move up and down. And I hunt for these extreme movements in percentage points because they actually help me make a lot more money. The last thing that you want is to have something that goes sideways that barely moves, right? You want something to go up and down a lot because you have a possible way to make more money, right? I think we've covered uptrend. I think we've covered downtrend already as well. So what does a pattern refer to? A pattern is it's very difficult to explain what a pattern is, actually, when I think about it. But a pattern simply refers to a shape that these particular charts could end up making that could give us an idea of where it could possibly go. So a very common pattern that you guys will see very often is, just as an example, is a triangle, okay? You might see a triangle shape like that, and we're going to get into very detailed shapes as well, specific patterns that you guys are actually going to get very familiar with, and once you learn them. So this might be a triangle like that. This might be an ascending triangle. This might be a descending triangle, right? And we also might have flag patterns as well, and we try to look for these types of patterns that could end up breaking upwards, right? Once we identify these patterns, so, other ones that I'm not personally a big fan of, but I will talk about is, for example, a cup and handle pattern as well, which we're going to teach you guys. So a cup and handle goes something like that, right? Where there's literally a cup and a handle, right? There's a spout, and there's a handle just like that, right? So there's a spout, right? There's the cup, there's a handle just like that. And there's other ones as well, like head and shoulders. And what a lot of traders do, or some traders do, is they look really hard for these types of patterns to emerge, because when we find patterns that emerge like this, they tend to be very profitable if we can actually catch them, right? So we'll get into patterns a lot more later down the road. So what does consolidation and correction, refer to? They generally refer to the same thing, in my personal opinion. So whenever you get a very large uptrend like this, right, you usually enter a consolidation or correction period, which usually refers to a downtrend where people end up selling and taking profit. So we have to remember that what goes up, right, it has to take a break, and people will eventually take profit. And when they actually take their profit, we're going to enter a period of consolidation that can happen for an undefined amount of period, right? So if we had a really big uptrend, we're eventually going to get some sort of downtrend that's definitely going to help consolidate the price. So we'll get a balance of supply and demand again, where we're eventually going to end up possibly breaking up once the consolidation is period is done. Now, the last thing you want to do as, say, a swing trader or an investor is, is trying to trade, for example, during consolidation periods. That's never good, right? Usually it's good to wait till the consolidation period is done, right? Or we find some sort of level of support where we can accumulate, where we can start to collect coins right before the consolidation period is done. And I personally believe that Bitcoin right now, we are so close, guys, to finishing this consolidation period, and we're getting ready for an actual really big uptrend. And it's just a matter of a few months, in my opinion, maybe 1 month at most. So what does a sell-off refer to? Okay, a sell-off refers to that exactly what it sounds, right? So when we reach this particular high up here of about $20,000, we had a very large sell-off. So a sell-off refers to people just taking profit, right? They bought it from really cheap, and then everybody just decides to sell, 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 sell because they want to take profit. That's usually just how it goes. So yeah. So what is a stop loss? Okay. A stop loss is a point that a trader or investor decides where to take their loss. Now, this is a very complicated subject because it also ties into risk to reward. But a stop loss is basically a security feature to minimize how much money you're losing. Now, what differentiates yourself between a mediocre trader is simply going to be how well you are disciplined and will stick to your stop loss. And that's something that we are going to heavily get into in the future as well. So I hope that you guys have enjoyed this very first lesson of just, it's more so an introduction class, right? I just wanted to show you guys what TradingView was, which we have gone through. I wanted to show you guys what coin market cap was. And I also wanted to introduce you guys, or to you guys, the charts as well, and just to see what's been going on and how these charts look, how we interact with them. And there's going to be a lot more information to come, guys. I wanted to introduce just some very basic terminology that a lot of people will use. This way, maybe you guys can write them down. Maybe you could also do more research on it as well. Make sure that you guys understand that my classes that you're taking and through these lessons, right? Your learning will be heavily subsidized, and it will be further improved if you're also using Google to get definitions from other places. Make sure you're interacting yourself with different markets as well, just to see if you can broaden your definition of what I'm talking about. And the most important thing is that when you're watching more technical analysis videos, specifically of mine, you'll hear me mention these terminologies over and over and over again, and they'll eventually just click, right? So what I did was, whenever I heard of all of these different terminologies, what I did simply was I would Google them, right? I didn't know what any of these meant. So I just kept Googling it over and over until I understood what they meant, and I watched different technical analysis videos. I read a lot of different TA video, or sorry, the text versions as well, for example, and eventually it just simply clicked. So I just want to give you guys a very quick introduction class to what a lot of these terminologies refer to, what coin market cap is, and then also a very general introduction to TradingView. So I hope you guys have enjoyed this lesson number 1, and I hope to look forward, or sorry, I look forward to seeing you guys for lesson 2. So have a great day, and thank you very much for participating in my class. I hope that you guys join me for the next one very soon. Bye now. Have a great night. Take care.